we had some pretty big news that we had the first rate cut from the Federal Reserve Board. Um, and it was the first rate cut since, was it March of 2020 or March of 2020? It's been the last year. I can't remember the exact year, but it's the first time in this cycle that we started easing. So that actually does have a lot of implications on kind of the investment landscape, kind of how do we view the next 6 to 12 months. For those who we've met with recently, we have been tailoring our portfolios in anticipation of this already. So we've probably had similar conversations with some of the attendees already, but that did begin today, and we would expect that over the next few months and a few FOMC meetings that we continue to see that trend, most likely but things do shift as economic data will come out. So Nick, I don't know if you had any other thoughts on that.
Yeah, it certainly was a tad bit of a surprise from market expectations. So I think that's the biggest takeaway. Most of us were expecting a 25 basis point. That's kind of what had been what we say priced in to the market. And just within the last 2 weeks, was traction gaining on the 50 basis points. So it begs the question, why the sudden change? You'll probably hear a lot of folks on CNBC, Fox News, CNN, whichever you get your news, Bloomberg, talking about, what is the secret message that the Fed's trying to tell? Is there a problem, or we starting to see chinks in the U.S. economy? And I think that's the biggest question that you're going to hear asked all through pundits. Things look strong on our end, but the Fed was very much behind the curve. And we'll kind of get to talk about that a little bit today and some of the data that we track, how we keep assets in sync. And so it certainly is interesting. But like Dylan said, it's something that we have seen. We knew rates were coming down. There's more to come. So people's mortgage rates will, depending on where you're at, start to see some relief there. But it's certainly a little bit of a shock to the rest of the market. So we saw a lot of downward pressure from the middle of the day to the end of the day, a pretty big swing. So that's probably the only thing I'll have to add on that.
Well, Nikki, you actually brought up a good point there. I think about mortgage rates and some other things that people may want to be thinking about in the back of their head. Not only will mortgage rates or the lending rates be going down on mortgages, but the lending rates on essentially all consumer debt will be starting to trickle down based off those cuts. So things that, we may have been talking about already, but things like S blocks or HELOCs may become more attractive for financing here in the near future. Refinancing the homes, if you're looking at exploring that, just all kind of consumer debt is going to become more attractive over the next 12 months, really.
Yeah, that's exactly right. One of the biggest, I don't want to say trends, but one of the biggest ways that we've seen financing over the last 2 years has been through adjustable rate mortgages in anticipation of this. So if you are in one, it's certainly the time to have that conversation with your financial team. Lock in here. Is there more room to go down? So great conversations that you can have, especially if you've purchased a mortgage, business, any large debt in the last 2 years. This is the time to start having those conversations and positioning your balance sheet.